Record today. I think I forgot to record my principal. I had to bring up one from last year and drop it in there. I need to bring this up before I bring up solutions or anything else. Jessica, those cops were looking for Miss Grogan.
What did she do?
Not what she did. Her husband's been disabled. He shouldn't be driving. He retired from public school teaching. He substituted once in a while. But he's had some kind of stroke, some kind of disease. I don't know what he's got. And she's had a rough time taking care of him and work and her grandkids. And anyway, he got out driving this morning and had an accident. And evidently, he was hurt bad enough that he couldn't call her. The police were looking for her.
Oh, jeez.
So downstairs, they gave the police, her cell phone. This is her day off.
So did she not, did she not know he was leaving? Or,
Well, she's home and he's home and he probably gets out once in a while. She said he drove short distance.
yeah.
But evidently he's out driving too much today. She has a rough time. She has her hands full with him. She's his caregiver, I guess, and but the only thing he's able to do more, but the only thing he helps her with is he takes out the garbage once or twice a week. But he does nothing. But she loves him and will take care of him, but it's rough on her.
That's not good.
Well, we never know what shape we'll get in when we get old enough. All right, we are on cost accounting, folks. We have been talking about a manufacturer statement. We've been talking about predetermined overhead rates. And we've been talking about internal entries in cost accounting. And say, you got your book now?
Yes.
Good. I don't know why the backs of those, what does the back of your book look like? Yours look faded. It's supposed to look like this. I guess they took away the color to make it cheaper.
This one's very used.
Same thing with mine.
Yeah.
Used.
They look like it, don't they?
Mine's
William, how about yours?
mine's still on the way.
I know it's on the way, William. Where's it coming from?
I got it off Amazon, and it's just coming later than they said it would.
Sometimes Amazon gets back ordered and it takes a little longer. They'll say it's in stock, but it's not.
Yeah. All right. But anyway, remember, chapter 1, nothing on a test. Chapter 2, everything in it's going to be on test. Manufacturer statement, internal interest, predetermined overhead rate. Now, chapter 3, you're going to have the high-low method, what have you. Now, test time is soon approaching. And it may be approaching as soon as next Thursday. Well, no after the date and of course Tuesday. But we did have a test sometime. If we're going to have 4 tests. Today is the 17th day of the semester, so Monday makes it 3 weeks then, don't it? I suppose. So we're 3 weeks in out of 15. Not bad. But when I went into office, I asked what the police were there for, and Jessica, they said the same thing that you did. They were here to arrest me. Michelle said IRS sent them.
That's what it would be.
Anyway, I told them, yeah.
Out of all the things we listed, not once did anything in taxes come up.
The what now?
Instead of all the reasons that we listed that you could be arrested,
You didn't mention taxes, did
tax
you?
fraud was not one of them.
I told my boss I was carrying a gun, smoking pot, and sexual harassing my students. All right, that would be female students. All right. I guess it could work both ways.
Thanks for setting the record straight.
Yeah,
Do what?
Thank you for setting the record straight.
absolutely.
Yeah.
We needed clarification.
Yeah. All right.
Thank goodness, I thought I was next on his list.
I have told my students before, and I'm recording this right now. I've had gay students in class before, even at community college, and I had one gay student in my PBL, and I tell you, he loved to go shopping with the girls, and they loved shopping with him. And all I ever said, guys, I hope all of you are gay. That leaves more women for me. Anyhow, enough of that. What goes on a manufacturing statement, Jessica?
It's beginning inventory, no, well, beginning finished goods minus cost of goods.
Honey, you're way out there in the dark. And you're in the dark. All right. Now, had I asked you what went on an income statement, Jessica, you might have started off like you did. Because on an income statement, you may have beginning finished goods plus cost of manufacturing.
Oh, I was doing the cost of
Yeah,
goods
that
sold.
gives you finished goods available minus ending finished goods would give you cost of goods sold. That's on the income statement. Beginning finished goods plus your manufacturing cost, then your ending, that means you sold, that gives you cost of goods. But now if we're looking at a manufacturing statement, we would do the same thing but for material.
That's the work in process.
Now we'd take beginning inventory plus purchases gives us materials available minus ending inventory gives us materials used. But don't worry about the materials part there. Let's say you already know materials used. Now what goes on a manufacturing statement?
That's the beginning work in process.
All right, you take work in process. All right, beginning. And what do we add to that? Materials, labor, overhead. Now this is current manufacturing cost. Now if we add it to beginning inventory, we get all manufacturing costs. But if we take away ending work in process, we get manufacturing cost of goods manufactured. We ship that over to the income statement. You got to know that. You got to know what goes on a manufacturing statement. Now, some of you had books. I'm sure I assigned you one or two, and you need to hopefully have done that. Now, that's one important concept. Now, a predetermined overhead rate, how do we calculate those, say? How do we calculate overhead rate?
Overhead rates. I'm not sure.
Alexandra, how do we calculate overhead rate?
I feel like it's right.
Oh, you know that. What is it, folks?
It's the I see the formula in my head. It's
You take overhead,
and it's either
but this is
machine
budgeted or
hours.
estimated
Yeah, and
for
it's
the whole year.
Divided
machine
by labor
hours,
hours.
direct cost, machine hours, cost, or labor hours,
direct labor hours,
machine hours.
or machine hours, or direct labor
costs.
dollars. All right?
I told you I could see it in my head, I just couldn't get it out.
When we divide here, we get a rate here. We get a dollar amount, and here we get a dollar amount. If you divide dollars into dollars, you get a percent or a rate. So that's the three denominators to get an overhead rate: budgeted or estimated overhead divided by some denominator. It could be other things, purchase orders, what have you. Now, we went with that. All right. Now, one thing we haven't worked with much, if I have overhead, we could call it a control account. Now, if I use this overhead rate and I've got applied overhead will be credit because you debit what? When I credit a overhead, what do I debit? When I credit overhead, what do I debit? What do I debit when I credit materials? What do I credit when I debit salaries, credit salaries payable? What do I credit what do I debit when I credit overhead applied? There you go. Three ingredients. All right, let's say your actual overhead was 205. Now, here I debit overhead. What do I credit when I debit overhead for my actual? What do I credit? What do I credit when I debit factory overhead? All kinds of things. Accounts payable, rent payable, accumulated depreciation, taxes payable, whatever. All kinds of things when I debit overhead. Now, other than administrative and selling expenses, the factory part of it, you never see the word expense. It's factory overhead. And credit taxes payable. It's debit factory overhead and credit accumulated depreciation. You never see the word expense. All right. Now, we don't balance here, do we? How much do I need to balance?
You're 5,000 over applied.
I need 5 to balance. So I'm going to debit factory overhead, make it balance. But for every debit, I need a credit. What will I credit for 5,000?
That'd be work in progress.
No. All right.
Over applied, under applied.
All right. Now, when I debit work in process and credit materials, overhead, and salaries payable, that is my current cost estimate. Now, overhead goes in to cost of goods sold, don't it? So we put in 5 too much. We need to take it out. So I debit factory overhead 5 and I credit cost of goods sold 5. Now, if this were reversed, now what is my odd balance? All right, I need to credit factory overhead 15, and what will I debit?
Cost of goods sold.
And that increases my cost of goods sold, don't it? Because it needs to be increased. We made a bad judgment. Now, let's say this was major, and we consider 25,000 major. And we don't allocate the cost of goods sold. What do we allocate it to? We take a ratio of cost of goods sold, finished goods, and work in process. Okay? And we'll get a ratio and split that 25, and we will credit factory overhead 25. We'll debit cost of goods sold for some part of that, finished goods for some part, because that expense is in finished goods to it, and some of it's in work in process. Now that's pretty much where we ended our talk, except we got on one more subject. We got on this high-low method. Do you remember how to do it? All right. We were skipping the method of least squares. The method of least squares, you probably have a lot of symbols like that, meaning the sum of, I guess.
Yeah.
And I don't want to go back to all that math stuff.
It's like the sum of x squared plus the sum of x squared over the sum of the total. Like it's
Well, I avoided math in high school. I got a D out of first year algebra.
it's not hard.
No,
It's just not.
but I didn't do anything. We had 2 lunch times, and I sat there while these other girls were walking by the window at their lunch time, and I was wishing I was out there on their lunch time. Okay. So I took 10th grade bonehead math, and that teacher put me in the dumb row because we had to go to the board to illustrate a problem. And here's what why he put me in the dumb row. What's wrong with it, Seth? Looks good to me.
It's not spelled right.
No, I thought it was in 10th grade. Anyway, I got back out of the dumb row. And I probably had an A in that class because I knew math real well. So I avoided math. So now I'm off to college and I got to take pre-calculus. And I study it, and probably get a tutor. But so I skipped calculus. I took pre-cal, I skipped calculus, and on MBA we had to have advanced calculus. So I enrolled in advanced calculus and never had calculus. So with tutors and me studying, I did it. I got through it. I think I had 2 B's on my MBA, and calculus was one of them. And then the public schools of Virginia certified me to teach math on the high school level through Algebra 1. Anyway, I like math. Should never have avoided math. I should have taken all that I could have. I liked it. I just didn't think I liked it at the time. Same way with some of you all. You don't take sometimes what's good for you. And why are there only 4 of you here majoring in accounting? Because it's a tougher curriculum. Marketing might be easier. And so we have a lot of people that flocks over to marketing or management. Entrepreneurship, some people flock to it, and some flock to health services. But the jobs are out there in accounting. There is a shortage right now of accountants, and a shortage of bookkeepers. Okay? You don't step right out of here being a manager, do you? You just don't step out of here being a manager. But you do step out of here being an accountant if you want to. And you can already pass the CPA if you want to. But anyway, if you ever want to pass the CPA, you got to have 150 hours. You can actually get most of those here. It doesn't say you have to have a degree. But if you're going to get 34 hours beyond a master's, get a master's, folks. Get a master's degree, and then say for a CPA. And you'll do well in life. Okay? Now my granddaughter graduated from UT 2 years ago. She's had a couple, 3 different jobs. She graduated in marketing, and she was a TV reporter for a while for Channel 5 down in Bristol, Tennessee. And then she went on to Atlanta. She wrote stories for movie stars and sports figures to make them look good. And then she moved back to Knoxville. I think I told you she was in Pet Supplies. They make the collars and electronic fences and harnesses and so forth for dogs. And they're sold every pet store and many Walmarts, I guess. And she moved up probably during Christmas vacation to the chief marketing director of that company. And her 24. She is making double the salary I am now. That's my granddaughter, 24 years old. All right, so you can do it, folks. You don't have to be a UT graduate. You don't have to be my granddaughter. Okay, you can do it as well as anybody else. Jessica, how do you pay for your college tuition? I'm going to talk about this 2 minutes and I'll leave it.
Mine's all scholarships.
How about you, William?
Scholarships.
How about you, Seth?
Mostly financial aid.
Financial aid scholarship.
Mostly scholarship, but I need some student loan.
So you're the only one that's taking out a student loan? Nobody else has a student loan? You know, I don't know what these politicians think. I know your West Virginia governor don't agree, and probably your senator from Virginia, whatever his name is, don't agree. It would take a lot of tax dollars to give everybody free education with it. What if you wanted to go to Harvard? Tuition $100,000 a year. All right, and it's unfair to some of us who did have to strive to get different scholarships or loans or whatever. I worked a year first, saved some money, and then when I went, I was a student worker, like I said, I was a student worker for all 4 years. My accounting professor, I had the accounting principles, and he put me in to a county lab where I had people coming in there with intermediate, and I'd only had principles. So I just used his solution manual to help them, because I hadn't had the course. But I worked every summer. I went to Detroit and worked at Chrysler, or I laid carpet. I worked for a coat company one summer. So I made it. Now, Alexandra, I got a $3,000 loan. And at that time, it's probably a lot of money. We're talking about a few years ago. 77. But anyway, because I was teaching Alexandra, they canceled 15% of that debt a year. Because I was teaching in a poverty-stricken region, which was Appalachian region, which was Southwest Virginia. Same as this part of West Virginia. So after teaching 6, 7 years, my debt was all wiped out. But yet I did something to get it wiped out. It just, if I wasn't teaching, I'd had to pay it. Okay, now that brings us to chapter 3. And we will not do the appendix. Now the high-low method, I think you're okay with that. Now, what is absorption costing? What is absorption costing? I told you the other day.
It's what we've been doing.
It's what?
It's what we've been doing.
What you've always done. It's like in a financial accounting. Principles 1, intermediate, yes. All right. And what is variable costing? Since William doesn't have a book, and I want to repeat this method once again. This is the high-low method. We're just probably going to look at it today. We'll practice it probably today and Tuesday. We might have a test next week, Thursday, but no later than Tuesday after that. Alright. The high-low method. Trying to get rid of that. We got some items. Now here it is machine hours and utility costs, right? Now, we can relate this to hospital, ER, the number of visits, all right, and the cost. We can relate this to the operating room in a hospital. We could relate this to a motel, how many days you rented it in each month, and the cost each month. And we can separate the fixed from the variable. So it can be a marketing tool. It can be a service tool, such as a hospital. All right? We can even relate it to a barber shop. How many heads did you cut this month and your cost? So we can do it many things. But here, it looks like May, is May your higher? That's the highest, right? 3,900. Now the lowest, wait a minute. Is this the lowest? 46 the lowest? All right, I want you all to pick the highest and the lowest and subtract the two. On a sheet of paper, pick the highest and the lowest and subtract the two. Now divide the difference in units into the difference in dollars. I have no clue why I have October check either. All right. Now let's see if we're on the same page as the author. We're not. You got the low, right? And you got the low dollar. You know why he picked 9,000?
Because the other one was an outlier.
Because what?
The one we picked was an outlier.
Right. What was that word after it there?
Outlier.
Right. It was just out of sequence or something. Unusual month time. Maybe there was a, I don't know what was going on. Maybe they worked a lot of overtime. I don't know. All right, so you had to pick 9,000. And that's going to change your answer. So 4,400 into 1,320 will give you 30 cents per machine hour. Now you can plug 30 cents into 9, get 2,700 fixed. No, that's not fixed. Subtract 2,700 from 35. What do you get? 27 from 35. What do you get? So you get 8. Now subtract 13.8 from 21.8. What do you get? Should get 8. Now that's the method. You all worked it today. Are you okay with it? Okay. We'll practice it one more time before we leave. All right, here's where we ended class the other day. Well, somewhere here. We've got normal capacity. And sometimes we have theoretical capacity and expected capacity and so forth. And the one thing I showed you here the other day, your variable rate is always the what? Your variable rate's always what? The same. But your variable amount is always different. Now, when you go down to your fixed part of this, your fixed rate is always, your fixed amount is always what? But your rate's always different. So, your fixed rate is always different. Your variable rate is constant. Fixed expenses are always constant. Your variable expenses vary. So, you gotta watch out for that. That tricks some students and it should. Okay, what do we do with this? We're gonna look at some budgets. I'm gonna flip you over to some budgets. Of course, we talked about absorption costing and variable costing. This is absorption cost per unit, and your variable cost per unit will change. But that's not the example I need. Now here's what I need. Now that is, like Jessica said, what you've always done, right? Now what is your net income under this method? $426,600. So you've always done that. Sales minus cost of goods sold gives you gross margin minus sale administrative. Don't worry about this volume buried stuff yet, okay? We're not into that yet. Now this next one, what is your net income? What's your net income under variable costing? Is it going to be the same? All right. This is nothing more than the formula that I've given you over and over, especially in managerial, by taking your sales or revenue minus variable cost gives you contribution margin minus fixed expenses gives you net income. That's the same thing I've always given you in that formula. Now, let's see what they've got here. They've got all your variable. You got sales minus variable gives you contribution margin. Minus fixed gives you income before taxes. So know the difference. Probably on a test, I'll give you a little income statement. You do it both ways. Absorption, variable. And of course we can compare those. The method of least squares we're not going to worry about. And you know, they don't have all those budgets here like I thought. So we don't have to do all these variances yet, volume variance, budget variance, but we will have a chapter on those. All right, this chapter keeps it pretty simple. This chapter pretty much has two things in it. The high-low method and the two income statements. That's all it has. All right. Excuse me. Let's see if we can work a little bit on the things that I've already mentioned as a review. And since we don't have a book yet, we got some under and overhead, under applied overhead here. Now I want you to see if you remember what we do with it. I'm going to show that to William as the best I can. These little gadgets come in handy. I think Dr. Sneed likes them, but they should bring them over for every room. All right, here we've got $40,000, right? Now here is our work in process, finished goods, and cost of goods sold. Now that 40,000 is significant. Now first off, see if you can calculate A part. Calculate A part first. That's a little thought question. See if you can do that. All right, you should look at it. What's your answer? All right, Jessica, how do we calculate overhead rate?
Overhead rate is your overhead over either machine hours, direct labor hours, or direct labor costs.
Let's say you put over direct labor cost. Look up there. What is direct labor cost in the first one? Working process. What,
10,000,
how much is overhead?
20,
And what is direct labor and finished goods?
40,
What's overhead?
80,
What is direct labor and cost of goods sold?
50,
What's overhead?
1,
So what rate do we use?
$2. Yeah, $2.
$2? $2? What do we multiply $2 by? We don't know the hours. Jessica, divide 10,000 into 20. Divide 10 into 20. What do you get?
0.5, but you have to do overhead.
10 into 20, honey, is 2. 200%. I told you when you divide dollars into dollars, you get a percent. They use 200%. What is 200% of 10,000? What is 200% of 40,000? What is 200% of 50,000? 200% was your answer. See that now? Okay. Now, provide arguments to be used for deciding whether to prorate to balance. No, don't need that. C, prorate to balance based on the relative balance of the appropriate account. So C is what I want you to do. Allocate that 40,000 overhead. It has a debit balance. Now a debit balance, that means it's under applied or over applied. It has a debit balance. Is it under applied or over applied? Under applied. Under applied. All right, now get rid of that under applied and C part. Do some prorated. All right, now how do we prorate anything? Add the three together, add the three totals together, and 5% for the three totals. Change all three totals to percents. Add them all three together. Just like depreciation, you have to add 5 machines together. were doing your homework in class. William, when you add these three together, what do you get? 470. You get 520? All right, now we can use just the 520. We don't need these other zeros. Take the 520, divide it into 50.
9%.
How much?
9.
Just 9%. All right, 550 divided into 200.
39%.
All right, now we know that that makes 48, don't we? This should be 52, is it? If you divide 270 into 520, do you get 52%? Now, let's see if you can write down that journal entry. We're dealing with $40,000. See if you can write down the journal entry. Take a minute and do so. You'll live stream and do the same thing. All right, so Jessica, we would debit or credit factory overhead?
Credit.
Yes, we want to increase the cost of all three of these categories. We want to increase the cost of work in process, and we will debit it for how much?
3,600.
9% of 40,000, 3,600. And we will debit finished goods,
15,600.
15.
15,600.
All right, and we will debit cost of goods sold.
20,800.
And when we post that, our factory overhead have a zero balance. These items have all increased, as they should. We were all 40,000 on our predetermined overhead rate. Okay, that's practicing applied, overhead, under and over applied. We won't look at capacity measures yet. All right, did we work number 21 the other day in your text? Check it and make sure. We're just reviewing some of the stuff we're supposed to be learning.
I think so.
We did or did not? Did we do number 20? I don't think we did number 22, did we? All right, let's take a minute and do the high-low on number 22.
Actually, number 22 is the one we did. We didn't do 21.
Oh, we did? I picked
Yeah.
the little numbers?
Yeah.
Okay, let's go up and pick the bigger numbers then.
Sorry. I had to think about it.
All right, we'll go up to number 4, or number whatever. 21. Alright, you should have that one maybe. Alright, what's your high cost?
August.
Is July your high hours?
August.
Huh? August, yeah, 34. And 12/2. And your low?
December.
31 and 11. And what we got? Just 6 months on here, don't we? Alright, 31 from 34 is what?
3,000.
3. And 11,720 from 12/2 is,
480.
if you divide that by 3,000, you only get how much?
16.
Cents? 16 cents. Alright. Now, when everybody else gets 16 cents? We're good on that? Alright. Now, when you apply that 16 cents, and you multiply it by 34, how much do you get?
5,440.
And if you subtract 5,440 from 12/2, what do you get?
You get 6,760.
That's supposed to be fixed cost. I hope it works. Alright, take 31 times 16 cents.
4,960.
Subtract from 11,720.
6,760.
It worked, didn't it? Okay. Sometimes they don't. They don't because the author didn't get his numbers in the pattern they should be in. Alright? They don't work. Alright. Now for homework, folks, let me give you the homework assignment before I forget that. I want you to do one more high-low, but on a different way. I want you to do number 24, a high-low. I want you to practice these variable and absorption costing. I want you to do number 29. And I want you to do number 32.
So 24, 29, and 32.
Got 3 problems. But we'll wrap this up Tuesday. We could have a test next Thursday. I hate to have a test until William gets his book, but we can't wait all semester, will you? You know that. All right. I want you to look at this problem right here. Now do me an income statement real quick with absorption costing. Don't look at the instructions. Can you do me an absorption costing real quick? Now, do we have net income?